Yo, what's up, guys? We're going to be buying 3 dividend stocks live right now. Just for fun, I'll be placing the orders live as I talk about them. We're going to be buying a stock here in my main taxable account, and then the bulk of the buying we're going to do in our Roth IRA. We have $800 of cash, and we're going to spend it all right now. Our Roth IRA is actually at an all-time high today, and I get it. Here's the thing. Market's at an all-time high right now. My portfolios are basically at an all-time high, but here are some stocks that I actually feel comfortable with paying at right now's valuation. So this first company I'm going to be buying is in my Roth IRA, and the first stock I actually want to buy is ticker symbol MAIN Main Street Capital. This is one of the few stocks that actually pay monthly. So if you buy shares here, you'll get dividend payment every single month. Whenever you buy stock, you always want to do a limit order, and then you go, I'm going to just buy it at $65. What's it right now? Actually, $65.69. We'll buy 3 shares of Main Street Capital. Hopefully that fills. Anyway, so we bought 3 more shares of this company. Let me show you how this company actually has a safe monthly paying dividend, because we always want to check, for some of these higher yielding names, is the yield actually safe? And in this case, I believe so. Check this out. They have a 6.4% dividend yield, and look, you get paid 25 cents every single month. And I'll kind of make the math really easy here. We'll just look at net income, because they've been doing really good with some of their equities, but basically they're easily making every quarter over 100 million of net income. This is a BDC, so they actually have to pay out most of their income in the form of a dividend by law, but they're easily making over 100 million in net income a quarter. And the dividend every quarter cost exactly 84 million. So that shows that they actually have room to raise their dividend, which is pretty cool. Another way we can kind of do the math on this is the monthly dividend. They pay 25 cents a month, which is 79 cents a quarter. And as we can see, every quarter of EPS, it's well over $1. That's how they're able to do these special dividends. Notice they pay 25 cents a month. Then there's this 30-cent special dividend here, 30-cent special dividend. They're rewarding the shareholder, sometimes paying twice in 1 month. So anyway, that's why I like Main Street Capital. I wonder how they will perform in a lower interest rate environment, but that's one that I think is going to be nice. And here I can show you my dividend history if you want, but look, $1.79 on August 15th, September 15th. Basically, on every month on the 15th, you get your monthly payment from them. And I own them in my Roth IRA as well, so the dividends are tax-free. So the next stock I actually want to pick up here in my Roth IRA is ticker symbol IRM, Iron Mountain REIT. It's another dividend-paying stock, and they're at $99.40 a share right now. So $99.40, that's a bit more than I wanted to pay. But you know what? Sometimes it's worth buying high quality companies at a high price. So we're going to buy 6 shares of this stock right here. Hopefully that fills. Yeah, there we go. It filled at $99.39. Pretty cool. So yeah, now we have 10 shares of Iron Mountain. If you're wondering what is Iron Mountain, this is actually a data center REIT. 95% of the S&P 500 are customers, and the dividend payout ratio is only a 61 to 62%. They actually have a rule where they want to keep their dividend payout ratio in the mid 60% or 60% payout ratio. And check out the yield. You get a 3.2% yield. So, 3.2% yield plus this nice stock price appreciation. So this one's been one of the best performing REITs out there. And we can also check the dividend payout ratio. This one's a REIT, so you don't look at the net income. You look at the net income plus the depreciation, the amortization, which is this number right here. And in the most recent quarter, they made $375 million. And let's go see how much the dividend cost. It should be like 60% of that. Yeah, there we go. Dividend on the bottom left only costs $231 million a quarter. So that shows that they actually have room to raise their dividend. They're actually raising their dividends faster than once a year. Like, notice this, it was 0.71 and then 0.78 in less than a year. So they're raising their dividend faster than once a year. Anyway, I think that one should benefit from the tailwinds from the AI sector, NVIDIA, AMD, they should benefit from all that. So they have a safe 3% dividend. That's what I like about them. And then finally, the last dividend stock I'm going to be buying live on the stream is one more share here in my main account of McDonald's. Dude, all these dividend stocks are up on the day. I don't like this, but oh well. So yeah, we're up 9.5%. This is one of my favorite stocks of all time. Like, even in a recession, McDonald's still should do pretty good. So let's pick up a share. What are they at? 304 or $304 exactly. All right. Wait, do I even have enough in my account? That might not be good. I only have 303. Okay, so I'm not allowed to deposit money live So you know what? Here's what I don't mind doing. Here's what some people don't like doing, but I don't mind doing this. We're going to buy a fractional share. We're going to buy 0.99 shares of McDonald's at 304.12. Hopefully not. This is why I don't like doing market prices. Let's see. Is it higher than 304.12? 304.1. Okay, so it actually filled it at a fair price. You know, sometimes if you ever place a market order, you'll buy the stock and then you'll notice it like you're instantly down 2% on the position. That's because you placed a market order, not a limit order. So let me talk about McDonald's now. Wait, this should be my largest holding now here. 488. Yeah, that's now my largest holding here in my main taxable account. By the way, every stock in this portfolio is like a dividend growth company. So every stock in here pays a dividend. And actually, let me start up this TikTok stream. Okay, so yeah, every stock in this account does pay a dividend. They're all like dividend growth companies. They're all in the S&P 500 as well. But let me give you a quick update on McDonald's. So here is also my dividend income. If anyone's curious, check this out, man. They just paid me $26 in dividends, and that was tax free. You know, McDonald's pays a qualified dividend, and for me, qualified dividends are taxed at 0%. But let me tell you why McDonald's is a company you just want to buy and never sell. In my opinion, they're literally recession proof. I mean, you can't really say recession proof, but in my mind, they're really recession resilient. Hey, what up, John? So yeah, McDonald's has a very nice, very safe dividend. They're really, if you didn't know, McDonald's is really a real estate royalty company. They're not a restaurant business. They only own the land. Under 80% of the McDonald's stores, they own the land. So every franchise pays rent every month. So even if we're in a recession and the franchise isn't doing too well, they're still getting that predictable rent every month. And on top of that, McDonald's, if you go spend $100 at any McDonald's, $4 of it goes back to this parent company. This corporation has a high margin royalty, literally 100% royalty. They take a sales and marketing royalty from every store. So you get, and some of the new stores have a 5% royalty. But anyway, they've been doing some good collaborations. Anyone noticed that Minecraft McDonald's movie box was a huge hit, and they also just brought back some value menus. Like they just did the $5 breakfast meal, the $8 Big Mac meal. And look at this, actually half the revenue comes from their international operated markets, and their international operated markets was at a record 3.46 billion, up 10%. You know, for McDonald's, that's not too shabby, and the dividend is so safe. You know, you also these assets are understated because all intangible assets, like the asset when they collect their royalties on, it's not included in there. So anyway, those were the 3 dividend stocks that I decided to pick up. So yeah, don't forget to drop a like on the video. Hope you have a great rest of your day. Happy to catch you streaming. Yeah, what up, John? All right. Yo, what up? Evan, he said ANET, Arista Networks. So let's look at Arista Networks right here. This is a company that deserves to be at an all-time high. Check this out. Arista Networks, you know, usually if you're looking at a stock and they're either at an all-time high or at an all-time low, it's usually explained by the financials. And in my case, I believe Arista Networks deserve to be at an all-time high. Check out the growth of the sales. You know, the revenue's up 31% after going 12, after going 42. Like, as you can see, you know, the revenue just hits a record every quarter. And look, this is the analyst expectation. The orange line is what the analysts expect. They're constantly beating on what the analysts expect. So no wonder the stock is going up and gapping up on earnings. And not just revenues growing, but actual profits. You know, check this out. They made $888.8 million of net income this quarter. It was great, up 33% year over year. They have a really good balance sheet. So from a financial point of view, I can totally understand why this one's at an all-time high. They're beating on every metric according to the analysts. They're growing. They're profitable. So yeah. Also, let me give you a quick portfolio update on the day because I haven't really done that. Hope everyone's having a great day. Looks like the market's going a little red, or my portfolio just went red on the day. And these are all the stocks that I own in here. Google's green. Meta's red. Anyone see that Meta glasses event yesterday with Zuck? It was actually pretty cool. Those glasses look pretty cool. Here's all my stocks by total percent change. So luckily, I was going to say we're up on every stock, but we're not up on every stock. We are now down on Carlisle Group. This is that roofing company that's really exposed to, you know, high interest rates and residential housing. But anyway, my Roth IRA is actually at an all-time high, I'm pretty sure today. Yeah, we're up 1.36%. Man, InnoData just continues to climb. Literally in a month, literally just in 1 month, this stock is up 100%. that all my gains basically came from the past month. We're up 117%. All that gains just in the last month. I know data's going crazy. Here's my total percent change on every stock in here. Only stock we're down on is CRMD, Core Medics. This one's not having a great day, down another 4%. But that's why you got to have a diversified portfolio, own a lot of different companies. One stock that's going absolutely bonkers is SoFi. New all-time high ever on SoFi. So if you've ever bought SoFi, you're for sure up on your money, man. I bought this stock years ago right here. Yeah, there's the buy orders. Yeah, I bought SoFi a long time ago. And unfortunately, if you notice, I only have 24 shares left. My not so smart self sold a lot of my SoFi at a much lower price. I regret every share I've ever sold. Same with like Robinhood, man. I'm up 700% on them. Only have 5 shares left. So if I had like 50 plus shares. So unfortunately, that's why, hey, don't, I heard one, it's like a quote, I don't know who said it, but like, don't trim your flowers and plant weeds, or the saying goes something like that. Yeah. Hey, what up? Are we in the green today? Pretty much no.